Hi, Matt McAleer, Director of Equity Strategies. June 23rd, just after the close, the Moose is in the house. John, let's jump over to fixed income. Had some comments out of Powell. What did it do to the fixed income market?
You know, if you look from last Friday to now, not a heck of a lot, right? So you had the short-term yields up a little bit. You got a 2-year bond at 4.75. You've got a 5-year bond at 4. They're both up 2 or 3 basis points. However, if you look at the 10 and 30-year bond, they're at basically a 375 and a 380. They're down 2 or 3 basis points. But there was bigger movement in between in the range. And when you think about what Jay Powell said, he didn't call it a pause, really, and he didn't call it a skip. He just says they're not raising rates, but they are looking to probably raise rates down the road. So he tried to put the big yellow caution flag out there last week. And, of course, he was speaking this week to not only the House Financial Services Committee, but the Senate Banking Committee, where there's always plenty of friendly faces that want to hammer him.
Sure.
In any case, when we look at what is there now, I think the markets, and I think you saw a little of this on the equity side, the markets are saying, boy, the Fed's not done yet. And you can see this in this one chart we have, which is, we've had it before, it's the difference between the 2-year and 10-year bond yield. And you see it, how it was severely negative in the beginning of March, about 108 basis points negative. It went back to negative 40 on all the banking crisis. And what happened? People said, oh boy, this thing's going to have a lot of contagion to it, and the Fed's going to be cutting rates. Not. And you see what's happened since then. It's gone back almost to that 100. It's gone back to 100, as not back to 108. But the bond market is saying, it's almost like what the babysitter said to me as a kid. John, you're never happy till somebody cries. I was always picking on my brothers and sisters. That's kind of like what's going on with the Fed. They're never happy till something breaks. And we don't know what that is. It was not the banking system, as it turned out. Could be commercial real estate down the road. But there's no question that the market is still looking down the road and around the corner for the Fed to level off at some point later this year and perhaps cut rates.
Yeah, and I think yields show that. You've been trading in a range on the fixed income market now for 6 months.
Absolutely.
Right? On the equity side, markets did almost what you would expect them to do this week. We had a chart up last week showing that the growth end of the market had reached an extreme in short-term momentum. And as we always say, there's no problem with short-term momentum,
right,
but it tends to need to get burned off a little bit. So you saw growth down 2-3% this week, primarily led by tech. Very natural selling. In terms of what we did in our portfolios this week, fairly quiet. U.S. ETF, David's strategy, sold the wind ETF. That's been an ETF that we've held for some time in the alternative energy space. And while growth continues in wind, John, they're not exempt to inflation like everything else.
No.
So cost is killing them in terms of labor, in terms of materials,
Sure.
Even in terms of approvals.
Right,
So,
and those are the legal fees, right?
Yeah. So we did move out of that, raised a little cash there. Some of the areas we're looking at, we've saw, if there was one area this week that did show a bid, had been soft for probably 4 weeks, 5 weeks, 6 weeks, had a nice bid this week was healthcare. Biotech had a little bid. So those are some areas that, while we own them, can be added to.
Right.
Some of the other spots we talked back almost 4 weeks ago now, when we got through 4,200 on the S&P 500, and we're now at 43 and change, call it 43.50, you would expect that 4,200 level to act as pretty good support on the way down.
Right.
There's an old term in trading. Once resistance is broken, it becomes support.
Right.
So we'll see. If we do have weakness next week, we'll be able to trade against that support level. So everybody enjoy the weekend. We'll see you next Friday.